What are the money moves that could help you to grow your wealth in 2025?
It's a mix of opportunity and caution. The first rule is stay calm. And I think you're going to have a lot of volatility as markets adjust to this new global paradigm in terms of geopolitics, as well as all the uncertainty around economics as well. If you start to panic, you might face a lot of risk. Number two is have a plan. The third is to stay informed and stay nimble. I think one of the things that we learned from 2024 and even the last few years is that policy is as important as stock fundamentals. So you need to stay on top of the news, understand what is happening, and then make changes to your portfolio to align with what is happening at the macro level. And fourth, and I think this is the most important, is diversify, diversify, diversify.
Here's what diversification looks like with a new US president in charge, a strong US economy, and high valuations.
There is this temptation to invest in the Magnificent Seven, but then that does come with quite a lot of risk. So I think it is important to diversify to other sectors, particularly cyclical sectors like the banks, utilities, real estate, which will benefit from things like falling interest rates, and also to diversify regionally and geographically as well.
Asia continues to be an important driver of global growth.
China is also a very interesting market to be in right now because the valuation is really very attractive, and you have high quality companies like Tencent. They are actually delivering growth year on year in terms of operating profit. Actually, they've grown by 30%, and despite that kind of growth, the valuation is still very appealing, right? And with government commitment to actually revive the economy in the year 2025, I think chances are very high that a lot of Chinese stock would do a lot better as compared to the year 2024.
Fueled by young demographics and a rising middle class, Southeast Asia also offers opportunities for investors.
I mean, yes, investing in the US is important, but there are some great investment ideas and investment stories in where we live in Southeast Asia and Singapore, where you've got high quality companies that pay very high dividend, that are well managed at much more reasonable valuations.
Closer to home, I think that the bank should continue to do well, right? But I don't expect significant upside than what we've seen in 2024 because the rate is coming down and it's expected to come down again in 2025, but at a slower pace. I think bank will be able to adjust themselves. But REITs, I believe, is a segment where it's likely going to benefit from the lower rate environment, right? And high quality REITs, they actually be increasing the rental, and this rental will subsequently flow into 2025. And if they can have the saving on the interest cost by itself, right, that will actually give them rooms to actually improve the distribution per unit for the unit holders in 2025.
Investors should also diversify across asset classes to reduce the overall risk of their portfolios.
Investors should look at ETFs as well, because that enables you to diversify risk, take part in the broader market, but also take part in specific themes that can benefit from all these global changes that are happening. If you have interest rates coming off, I think fixed income is also quite important as well at this stage to diversify some of the risk. And given the sort of geopolitical uncertainty there is, and we can't really predict the future there, gold is also another sort of diversification investment to look at as well.
And despite rates trending lower, Rasmin says government securities can still be a good option for people with low-risk appetites or who don't want to invest in stocks.
Although T-bills tends to be a lot shorter, 6 months, 1 year, right? You don't know what's going to happen after that. But it will give you a lot of liquidity if you need to in the next 6 months to a year, rather than just parking the cash in the bank, which earn a pathetic interest rate, unless you put it into a fixed income, right, or fixed deposit that the bank offers to you. Yeah. But generally, I think that cash portion should it should be keep it short term, right? So Singapore saving bonds would be my first option, right? Because you can always liquidate anytime without any penalty, and you still get the payout, yeah, in less than a month, yeah. So that will give you the option to invest if there's opportunity pop up down the road.
2025 is expected to bring continued strong corporate profits, but there are risks that could upset those expectations.
In terms of the overall volatility in the markets, two things will matter. Obviously, the fiscal side coming from, the Trump tweets, because that's going to have a huge impact on how global supply chains move, reshuffle. It'll have impact on alliances and so on. And the second is what the Fed does. The battle against inflation is not over. So I think it's important that we don't get complacent about it.
You can expect that stock market is going to be a lot more volatile, right? So I would personally, I think, avoid companies that are very dependent on import or export, especially between US and China.
There is this temptation when markets are very volatile to make opportunistic trades. But if you look at statistically, opportunistic trades don't always work out. So, have an idea of what your investment goals are, set your risk tolerance, and then stick with that plan. So I think that's very, very important going into 2025.